time for Wave 3 Listens Live on Kentuckiana's first live local TV talk show, all hosted by John Ramsey. This is Wave 3 Listens Live.
And welcome to Wave 3 Listens Live. Hope you had a fantastic weekend. What a beautiful day Sunday, and the nice weather continues. It makes you kind of think about retirement. Let's talk about that. Brookstone Financial is here. Seth Stewart is with us as well. We thank you so much for joining us. As I said, maybe that weather kind of inspired you to start thinking about retirement and doing something about it. We have some answers for you. We're going to help you with your roadmap to retirement. Seth, welcome back. And I guess we got to begin by doing something we do every week. We're going to take a look at those interest rates, right?
We are, yeah. Interest rates are looking up at Brookstone Financial. We've got FDIC insured money markets currently paying 0.80%. 3-year fixed annuities are at 2%, 5-year fixed annuities at 3.25%, and then the 1 to 5 year maturity bonds, those yields pretty well speak for themselves. A lot of interest, John, in those bonds. And the other week we were talking about interest rate risk associated with bonds. And the thing about interest rate risk with bonds is as long as you're holding the bonds to maturity, you don't have to worry so much about the interest rate risk. So that's why at Brookstone we're really sticking short term when it comes to those bond offerings.
Seth, before we get specific about our topic this week, I wanted to talk to you a little bit about what Brookstone's all about. It really is about solutions, and it's not about products. And for folks who are kind of measuring, okay, where do I go? Who do I talk to? What kind of advice do I need? Tell us a little bit about Brookstone and your philosophy.
Yeah, John, we focus on problem solving and not product sales. I mean, at Brookstone Financial, we realize that Americans have problems, and especially when it comes to retirement planning. They've got all this stuff, but then they enter retirement, and it's like, okay, now I need a plan. Now it's time to have a plan, collectively assemble all these assets, things like Social Security, pension election options. Our job is to put together that comprehensive plan that to provide you more clarity on things like when and how you should elect Social Security. What pension election options should you choose? Should you take full survivor benefit or 50% survivor benefit? And then ultimately, how should your investments be allocated in such volatile times? Because we are starting to see more volatility, and I'd say that's likely here to stay for some time. One
of the options, and this seems to be pretty solid, is REITs. Yeah. When we talk about REITs, I think you guys have a nice little, I guess, an advantage in that you're looking at particular sites or particular real estate that has been proven to be a winner. Tell me a little bit about that.
Yeah, John, we love real estate. I mean, when you look at portfolio allocations and diversifying your portfolio, real estate is a solid sector to consider. And when I look at real estate, I really consider two things, right? I like real estate that's driven by demographics and necessity. And if you think about demographically speaking, what's going on today, we have 10,000 baby boomers turning 65 each and every day, and that trend is going to continue for 10 plus years. So first of all, we have an aging population, and demographics are destiny. Then we look at necessity of life. Healthcare is a necessity of life. The likelihood that facilities such as adult daycares, assisted living centers, and even nursing homes, the likelihood that those facilities are going to be at high occupancy rate over the next 10 to 20 years, John, is almost factual. So we love that sector of real estate, those types of real estate investments that are purchasing the adult daycares, the assisted living centers, and the nursing homes.
So these senior care type facilities, you kind of target those and look at those, and then for your clients you say, okay, let's invest in this because this looks like it's going to have a nice return, correct?
Yeah, and it's great current income. When you look at these types of investments, I mean, you buy them for two reasons. You buy them for capital appreciation opportunity and current income. Now, along the way, there's a lot of stability as well. And again, the stability comes back to the sector of real estate that we're looking at and the necessity for health care. So there is more stability in that sector. I'll give you an example, John. If we were considering real estate investments that are buying strip malls, I mean, look around town. I mean, where do you see vacancies? You see vacancies in strip malls. So currently, I'm not a big fan of investing in those types of real estate investments. I love the assisted living, the adult daycare, and the nursing home sector.
It makes perfect sense. And if you'd like to go to the website for Brookstone Financial, there's a good reason. You know, you're speaking about real estate investments and trusts. Right here, you can download this information, right?
Yeah, there's a great download. Real estate investment trust. This is an asset class you need to be familiar with. Go to the website right now, get the report. It's a free download, brookstonefinancial.com. You'll find a clear explanation of of exactly what REITs are, again, real estate investment trusts, and why we use them with our clients at Brookstone Financial.
It makes perfect sense. All right, now you're a numbers cruncher, and I see you going to work there on the old iPad. Or is that a tablet or an iPad?
It's an iPad.
Looks really extremely thin there, maybe because I have a case on mine. Anyway, what kind of numbers are you going to show us today, Seth?
Yeah, I want to look at real estate from an asset class standpoint. I mean, everyone's pretty familiar with stocks and bonds and treasuries and inflation. I mean, those are asset classes. Now, when you look at real estate over time, and if we could pull this graphic up, this first graphic I have, if you go back, this is back in 1972, okay? To current, the gray line at the top, that is the growth of real estate over time. And to give you an example, John, just below that, this blue line, this is the growth in stocks. Just below that is the growth in bonds. So you can see as a pure asset class in and of itself, real estate has a phenomenal long-term track record. Now, yes, it did take a hit in 08. There's 08 and 09 right there. I mean, that dip. There's very few things that didn't take a hit in 08 and 09. I mean, short of putting it under your mattress or buying gold, very few things that didn't take a hit. So we love real estate. Now, we love real estate for the same reason that large institutions love real estate. And this is what we call the alternative allocation. And this is what major endowments, or how major endowments are investing their money. If you look at traditional portfolio allocation, John, it typically involves stocks and bonds. And maybe it's 60-40, maybe it's 70-30, and then again a little bit of cash there. By blending in real estate or alternative asset classes in, say, a 20% allocation, what you see happen, and this is called the endowment theory, and it's proven itself time and time again, what you see happen by adding this allocation to real estate is you see risk decreased. You see over here at the left, we're at 9.6%. Over on the right, we're at 8.6%. So you want to see a lower number there. But what you also see happen is you see returns increase. So that's all the more reason to consider adding real estate to your portfolio in an effort to decrease risk and increase returns, and that's why we use real estate.
And at Brookstone, if you happen to get specific as far as senior care facilities, I would imagine those numbers will go up even more, because then again, reducing the risk, these are guaranteed, I would think, close as you can get to having success, because those numbers are real as far as the aging population.
Well, John, there's a lot of stability in real estate. Now, I can't tell our clients that real estate is absolutely guaranteed, because when you're talking about guarantees, we're talking about money markets, CDs, fixed annuities. But again, there's a lot of stability in the real estate sector if you know where to look. So give us a call, visit the website, download this free report from brookstonefinancial.com. There you'll find a very clear understanding of exactly what REITs are, how they work, and why you should consider them in your portfolio.
All right, more on REITs coming up, more on your roadmap to retirement. Brookstone Financial, Seth Stewart, will be right back. It is the Monday edition of Wave 3 Listens Live. Another nice event with the great people at Brookstone Financial. Take a look-see. This is at Kingfish Restaurant. Good food, great view, and we'll talk about IRA and legacy planning. Tell us all about it, Seth.
Yeah, John, I always tell my clients, our number one goal is to provide them a predictable, solid, sustainable retirement income stream, but a close second to that is how do we transfer what's left to the next generation. We're going to be talking about both at Kingfish tomorrow evening from 6 to 8 p.m. That's Kingfish in Jeffersonville. Give us a call at the number on the bottom of the screen if you'd like to RSVP. We do have a few seats left, but I'll tell you what, we've had a phenomenal turnout, phenomenal response to this event. You got to get out there. It's going to be a great time.
So good information. It's absolutely free. So if you're just, and also I would think it would be a nice chance to meet some folks from Brookstone Financial and just find out if it's a good fit for you, right?
Yeah, we have pretty much our entire team that's going to be at that event. So I think it'll be a great time, great interaction, a great opportunity to ask questions about, get a feel for what we're all about.
You talked about probability of success. We talked about that a number of times on this show, and it really is about increasing your chances of having a very successful the retirement that you've dreamed of in your roadmap to retirement. Let's talk about that a bit.
And John, this right here, okay, this is what we call our probability success meter. We use a lot of technology at Brookstone. If you're working with an advisor or a firm that's not utilizing technology to their advantage, you're really missing out. You're missing the boat, okay? This probability success meter, our clients can go at any time on their tablet PC, their smartphone, or their home PC, and based upon all their account values, fluctuations in the market, their spending habits, and so on, they can clearly track and monitor their probability of success. Now, obviously, we want to see that meter in the green area or blue at all times, but if we log in any given time, or if we're notified that John Doe's plan has slipped into the red, we receive an email notification that allows us to proactively reach out to our clients. So it's a great system. It brings a lot of value, and more than anything, John, I'll tell you, that is sleep insurance, because when the market gets volatile, I don't know how people can sleep at night by not having their hands or a clear picture of the big picture when it comes to retirement.
All right, Seth, I know that green is good. Green is go.
Yeah.
Is blue like blue skies? It's like everything is really good?
Blue skies, clear sailing, right?
I love that. All right, more work on the iPad here. I like talking about probability of success and actually being able to track it. We have the official numbers cruncher at Brookstone Financial. All right, Seth, what do you want to see now?
Yeah, back to the iPad. So this is one of the reasons why we use real estate. It's because we want to increase that probability of success. And we went over this graph in the first segment of the show. Adding real estate to your portfolio potentially decreases risk and increases returns. But let me explain how these REITs actually work. And I want people to understand the life cycle of REITs. Typically, real estate investments start on the left side of the graph here, and they move to the right over time. So most REITs start out as non-traded. Okay, and in order to invest in non-traded REITs, you have to meet specific suitability requirements. But in the non-traded world, first of all, John, we've got a stable share price. So we have a share price right here. The flat line represents the share price. Doesn't go up, doesn't go down. It's not traded. Current income. Most income or distributions in non-traded real estate, John, is between 6 and 7%. That's great, stable, predictable retirement income. Now, when you're buying non-traded REITs, though, they are illiquid. Okay, so it's not much. You don't want to put money in there you're going to need in the next month or the next year, maybe even the next 3 years. Now, when we cross this threshold and these REITs become traded, let's assume that's their exit strategy. At that point, we start to see more volatility because obviously it is just like any other stock on the market. But typically, we see a surge at the initial offering because, John, this yield right here, 6 to 7%, is in demand in the publicly traded markets. So when they do become publicly traded, typically we're trying to capture our gains here, roll right back over to find another opportunity at the end of its life cycle. So we've been doing a lot of business in this particular area of real estate between the tail end of non-traded offerings and then going public. And personally, I still feel like there's another 4 to 6 years worth of opportunity. The thing that's really going to change this opportunity in the future is rising interest rates. So everything is cyclical, John. I mean, you look at the opportunity in the bond markets that presented itself 6 to 8 years ago. Good time to be buying bonds. Now's not necessarily a good time to be buying long-term bonds because you have too much interest rate risk. So this is an opportunity now, but it will cycle out of favor at some point in the future.
So when I followed your little graphic there on the REITs, it seems to me what you're saying is, okay, let's get into it before it's publicly traded, of course.
Yes.
And then after it hits that, it's attractive, then try to get out while the getting's good, so to speak, when it peaks, and then jump back into another opportunity, correct?
Exactly. For those that qualify to purchase non-traded REITs, that's a great strategy. And when you purchase at the tail end of the offering of the graph we just showed, you have a long track record of history, something to gauge success. If you invest in a non-traded REIT at the beginning of the offering, I mean, it's literally like putting your money in a bucket with everybody else's, and you just hope you do well. To where if you buy at the tail end, we have a well-established track record. We know what types of properties they own. We know what their occupancy rate is, and we also know that the hold time in that investment is likely to be much shorter than if we buy in at the beginning. But again, you got to go to brookstonefinancial.com, download the report, and we're actually going to follow up that report with some recommendations that we're actually suggesting to our clients in the healthcare sector, and this is a phenomenal opportunity.
You mentioned the healthcare sector and specifically senior living, and I can understand that. It makes perfect sense to me. Are there other trends that you see happening at Brookstone, Seth? I'm curious about other maybe areas of business where you're going, okay, this would be a nice little look-see. I better take a closer look.
Sure, yeah, absolutely. You know, personally, I like energy. I feel like energy's on sale right now. Long-term demand for oil is still there. It's not going anywhere. I mean, crude oil prices are at near all-time lows. I love that sector. I also love, coming back to real estate, I love real estate investments that are purchasing grocery stores. I mean, again, it's a necessity of life, John. We all have to eat. So in tough times, recessions, grocery stores, the real estate, the stock is fairly defensive because it comes back to a necessity of life. And you got to realize, most of our clients are fairly conservative because the average age of our client, John's probably 55 to 60 plus years of age. They don't have the time on their side necessarily to regain, to recoup losses in the stock market. So they're more interested in protecting and preserving what they have and outpacing inflation than they are, stepping up and trying to hit a home run, yet only to strike out.
I'm curious, at Brookstone Financial, I noticed in your chart you were saying if we put 20% of the market at this point into real estate, it can increase your probability of success, kind of thing. But with that being said, is that what you're recommending now? And this is kind of a moving part. It always evolves. So at this point, maybe is that the recommendation at Brookstone? Yeah,
we're taking anywhere between a 20 to 30% allocation to real estate and different sectors. Obviously, you don't want to put 20 to 30% of your portfolio in any one basket, but diversified real estate, we are taking many of our clients to the 20 to 30% mark because it's an effort to decrease risk and increase returns. And again, we're doing it for the same reason major endowments do it. I mean, think about this. Why shouldn't you manage your money the same way major endowments manage their money? I mean, think about it. They're managing billions of dollars, and you have the same opportunity to have your money managed the same way. It just makes sense.
I don't think we can overstress the importance of technology because when you talk about decreasing risk and increasing return, a lot of folks want that. But the fact is, you guys are keeping an eye on the market, so you increase Brookstone and your clients' probability of success, right?
Yeah, I mean, if you have no way to monitor this, and many brokers, advisors that I run into within the industry are just, they're kind of stuck in their way. Maybe they're not that familiar with technology. I like to think of myself as a fairly young guy. I mean, I'm 40 years old, so I'm not all that young, but at the same time, we really embrace technology because that's a phenomenal tool, and you need to get comfortable with it because it's here to stay, first and foremost, and it's dramatically changing the world of investing. It's really changing it at breakneck speed. I mean, so if you're not working with an advisor or a broker that's utilizing technology, you really need to come in and get a second opinion.
Yes, indeed. And by the way, 40 is not old, okay?
Okay, good. Yeah, I'm glad you clarified.
You are a youngster. All righty, Brookstone Financial, once again, give them a call. We'll talk about the first step that you can have in your roadmap to retirement, how to get a hold of Brookstone, what exactly will take place. We'll talk about that and more about real estate investments coming up here. And once again, we'll have a trivia question too. Seth Stewart is here, Brookstone Financial. We're live. We're Wave 3 Listens. Seth Stewart and Brookstone Financial are always bearing gifts. You're the guy that comes to the house. You got the bottle of wine. You're going to make sure you're polite. And you bring gifts today. Tell us about it, Seth.
Yeah, first of all, John, this gift is sponsored by Industrial Coating Contractors. This is a residential and commercial painting contractor in southern Indiana. First of all, very reliable service. So with the weather breaking, you have those projects, want to get the exterior painted, maybe some interior rooms. They have a $100 gift certificate we're giving away today. Question is, who was the world's first billionaire? The world's first, okay? A, Bill Gates, B, Henry Ford, C, John D. Rockefeller, or D, Andrew Carnegie.
Interesting. Okay, the world's first billionaire. You know what makes that interesting is the fact that, now billionaires are almost common. But back in the day of most of these guys here, wasn't that common. It was tough to attain that $1 billion mark.
Yeah, wouldn't that be nice?
Wow, wouldn't that be nice? Then you wouldn't need this show. But for most of us, like myself, you do need to talk to someone from Brookstone Financial. Before we went to break, Seth, I was talking about first steps. I think a lot of what you say, or everything you've said, makes sense to me. I mean, it's like, okay, I'd like to reduce my risk. I'd like to increase my return.
Sure.
Folks like myself out there want to get an appointment. How's it work?
Complimentary consultation, first and foremost. Okay, so it's a 1-hour complimentary consultation with myself at Brookstone Financial. Now, we are one relationship, a team of professionals. So if we come across say it's a Medicare supplement need, or maybe even a Social Security question, we may bring in that team member to back me up. So it is one relationship, team of professionals, but the first consultation is absolutely free. And let me tell you something, bring whatever you're comfortable bringing. But I will tell you this, the more information you provide us, the better advice we can provide you. So if you're interested in finally making a holistic, comprehensive financial plan, give us a call, and we'd love to speak with you.
All righty, and we'll put up the locations here shortly. But first of all, and tell me the importance of this. We do an interest rate update.
Yep.
For the average Joe like myself, what is the importance of putting up the interest rate every week?
Okay, John, I mean, if you have money at the local bank, you know that the interest rates are horrible right now on money markets. I mean, most local banks I run into are paying 0.15, 0.25% on money markets. So interest rates, you know, people want decent interest rates in a safe environment. Now, you know, here's the thing, John. If you're not beating 3%, if you're not earning at least 3% on your money each and every year, on average, you're really going broke slow because you're losing buying power to
Cost
inflation.
of living, too.
Cost of living,
There you
yeah.
go.
So at Brookstone, currently, money markets are at 0.80. 3-year fixed annuities 2%, 5-year fixed annuities 3.25%, 1-year bonds 5%. You got to hold them to maturity, and 5-year bonds all the way out to 8.5%. And again, we need to hold those to maturity. And I'll give you an example. Let's say someone came in with $30,000. We may consider laddering those bonds. Put $10,000 in a 1 year, 10 in a 2, and 10 in a 3, and then you have a liquidity event and a decision to make every year. And as interest rates rise, you can roll into higher rates.
Yeah, because I would think some folks would be a little apprehensive about, wow, I don't know if my situation's going to change.
Yeah.
But so you give them a window about every 1, 2, 3, 5 years?
Yeah, liquidity is critical. I mean, you know, liquidity, you never know when you're going to need a roof on the house, the furnace goes out, but you got to have access to your money. You know, the last thing you want to do is tie your money up in such an uncertain environment and when interest rates are so low. So having access to your money is very, very important to us at Brookstone.
If you'd like to meet with Seth or a member of his team, depending on your concerns or your roadmap, your very personal roadmap to retirement, what should someone bring? You were telling me one time, as much as you're comfortable with. Is that
yeah, I mean, bring what you're comfortable with, but the basics are, you know, your investment statements, 401k statements, checking savings, maybe you have a will, trust, power of attorney that you want to revisit. Bring all the financial documents and estate planning documents, again, that you're comfortable sharing, because the more information you provide us, the better advice we can give you.
All right, and again, this Kingfish.
Yeah.
Now, you talk about your roadmap to retirement. A lot of folks want to make sure that their kids have something, you know, to remember them by, a positive little memory here, and this is what that's kind of all about.
Yeah,
right?
IRA and legacy planning. And John, getting assets efficiently to the next generation is very, very important in this day and age. I mean, taxes, historically speaking, are at all-time lows or near all-time lows. Taxes have nowhere to go but up in the future with $17 trillion plus in national debt. You got to attend this workshop, though. It's absolutely free. There's a complimentary meal. It's a Kingfish restaurant in Jeffersonville. It's called IRA and Legacy Planning. It's tomorrow evening, so this is the last night of a 4-night series, and we packed the house. Okay, that room will hold 80 people. I think last Thursday we had about 70 people. So get in there quick, because there's only a few seats left.
All right, that's a nice view too. Good food. I like Kingfish.
Nice view of the flooded river, right?
Well, hopefully though, this weather continues. I don't even mind looking at flooded water as long as the sun's out. It's beautiful outside.
Yeah, it is.
All right. Well, you want blue skies, then we want your probability of success meter to go right on that blue, past the green, and it can happen with Brookstone Financial. Let's put up those locations here real quickly, Seth. Tell everybody how to make an appointment.
Yeah, John, they can visit us in Jeffersonville, Louisville, Jasper, or Madison, serving all communities. We also do offer in-home appointments if it's more easy. You know, if it's more convenient for you, we would be more than willing to meet you at your home. But if you want to check us out, and I would encourage you to do so, call the number on the screen, visit our website, and schedule that complimentary consultation.
And again, you're problem solvers, not really a particular product. You have access to all the products. It's just what works for you.
People are so reluctant to call a financial advisor because they feel like they're going to be sold something. And let me just do you a favor right now, okay? When you walk into Brookstone, we're not going to try to sell you anything. First and foremost, we're going to try to identify the problems, the hurdles, the roadblocks that you're likely to face in the future. It's your money, it's your choice. But wouldn't you rather know about that problem when it's 10 or 15 years out than when it's 3 to 5 years out? And that's what the technology and the systems that we use allow our clients to identify. So they're no longer, John, kind of shooting from the hip, the shotgun approach. We're going to hand them a rifle with a lot of accuracy to put them on the right path.
I like that. That makes it real clear.
Yeah.
A rifle
with a lot of accuracy.
I like that. All right. Your retirement roadmap, Brookstone Financial. Will be right back on Wave 3 Listens.